Okay, so in this section, I do want to talk about something new that you guys can try for yourselves, backtest this if you want. And this is essentially, well, first off, I want to show you guys new things. This is a new uh, color scheme that I have. So basically, I'm only using two new ones right now, which is the original light blue I showed you guys previously, and then this is the neutral color scheme. So you guys can copy all this. This is all black, and then this is this full gray color here. Everything else stays the same. So you guys can try this color scheme out, and then for this color scheme, I like to compare with this combination for the colors for the position tool. So feel free to pause and check those out. But essentially, I added those, and I also add one more thing, which is structure. So for the line tool, I have now distinguishing between internal breaking structure and external. So BOS is just external, and internal, I put I in front. You guys can customize this however you want, but that's how I did it. So internal. Change your character as well. Internal sweep, close like that. Internal sweep. Same exact thing, just put an I in front. This helps to teach, but also just, I guess, to help you guys identify these things more clearly instead of getting confused between internal and external. Here's the thing with trading, because everything's fractal, we want to put everything into perspective, right? So, like, let's say this internal, or this black is external, blue should be internal. This, like I mentioned from previous videos, can happen any single time frame. Okay, so this is not the best drawing, but this can happen every single time frame. So right here, for example, on this chart here, this could be internal structure for the 5 minute, which is external here, but the 5 minute could be internal structure for the even higher time frame, which is this external right here on like the 15 minute, 30 minute. So there's something you want to keep in the back of your mind. There's internal and external structure for every single pair of time frames. Usually they are neighboring time frames. So for example, 1 minute paired with 5 minute or 15, and then make sure they're proportional enough, right? 1 minute is structure is not going to be internal structure for a 4 hour. Okay, that's way too big of a time frame difference. So that's something you guys want to keep in mind. Now the next thing is, let me add something real quick. Hopefully my mic isn't too loud. I'm not so sure if it is, but we'll work with it. Okay, so basically, can you guys hear that? I don't think you guys can hear that. Okay, anyway, essentially, this is the trades for today for me. Okay, this is just my new session indicator I built, programmed. I don't know if I will release this to the public, but there are other ones you can use as well for free in the community tab. But personally, this is the one I personally made for myself because I like it better. It has everything I need exactly. And then PY, if you guys been asking, this is just to mark out the zones. How I teach you guys, marking out the OBs with imbalances. So that is what that is. And then algos, algorithm I made. So not going to be releasing that at all. But I might release the kill zone sessions indicator for those that are interested potentially for sale. But anyway, that's not the point. Nonetheless, I want to talk about breaks of structure and sweeps today. So essentially, for breaks of structure, what we like to see is actually this is something I want you guys to test if you want. But this is what I've seen from experience. If we have like a very big break of structure, then I'll consider a valid break of structure, right? So say something like this. These are breaks of structure. And don't forget about inducement, right? So if something happens like this is not a break of structure. I don't mark anything here. Usually when this happens, this would be more like a sweep, meaning we expect this low to get taken out first before pushing back up. So I don't mark anything if there is inducement. What I do is I mark the inducement tool right here. Boom, that's inducement. I wait for price to come back to some OB flip down here and continue higher unless we are in a high time frame supply zone on the left. Okay. So what I want to distinguish today is breaks of structure is when there's a strong break above this level, and then sweeps are when you guys already know what sweeps are. Usually sweeps happen when we're in a ranging market where it sweeps both sides, right? Takes out both sides, and then we can look for trades in the ranging market, which I'll show you guys in a second. A, a sweep in a trending market, sometimes it might be something where it barely breaks above and it closes immediately back in, or in any market realistically. So for example, what I would say is here, I marked this as an internal sweep instead of break structure. Why? Because you guys can see price did indeed come lower than this point, and then boom, immediately made a move up and broke structure up internally. So this is a perfect example of something that I would, instead of marking as a break structure, that you guys understand, so instead of internal break structure, I would mark this actually as a internal sweep. Okay, because of how fast price really pushed back in the other direction. If price continue like printing candles like this with body closures, you can use body closure as well. For example, if you have a 1 minute body closure below this level, you could say it's a sweep. But for that, I added the 3 minute time frame actually because I find this to be more accurate for sweeps and structure. If there's a 3 minute body closure below, we can mark that as a valid break of structure or internal break. If it has a wick closure, what does that mean? A wick closure just essentially means the body closure of the candle is above the sweep or below the sweep, depending on which direction, right? So in this situation, the body of the candle is above the low price of the sweep. So for this situation, I would mark this as a sweep. And don't forget, the higher time frame, the better. So let's say there's like a 5 minute body closure, candle closure here. I would definitely consider this as an internal break. But because we closed so strongly above in the other direction with just a candle wick here, I would consider that a sweep. So something you guys definitely want to take into consideration when you're marking these. Something I just noticed. Okay, now next thing I want to talk about is just reviewing today's price. Okay, and how I was seeing price today. And I also think about potentially adding like case studies where I review certain trades per week, things like that, into the course, so you guys can follow along and potentially take some notes and learn from them. So something I definitely will be doing. But let's first go on the high time frame for a euro. I always start with the high time frame. When I get on the charts, daily usually doesn't matter too much to me. I do have a daily bias indicator, but I would say if you can understand structure on lower time frame, this will be a bit more accurate. Daily bias is for people that can't, they get confused between reading structure like this. So then they need something to guide them instantly, which is what my daily bias indicator does. It immediately tells you the bias for the day, right? And it's pretty accurate as well. It will increase your win rate guaranteed. I've done testing with the daily bias indicator and without. And daily bias, if you just take trades in that direction, it will have a higher win rate, about 10% or more, which is pretty significant if you ask me, actually. If you have a high R system, for example, like me. So right here on a higher time frame, this is what I was seeing. Okay, I like to mark out my high time frame inducement, right? You guys, I taught you guys inducement. This is clearly inducement right here. We still have imbalances above here on a different time frame, clear. And this is my external break. So right here, this is how I was marking my structure on the beginning of the day. I like to start on 4 hour, if I see anything on the 4 hour, I do see we tapped into demand right here, boom. So we can expect for the 4 hour external structure to break this high at some point. That is why I had that high marked, okay? And then of course we also tapped into supply here, so you want to take that in consideration. We are currently ranging on the 4 hour. We're in the range. And then if we go on the 1 hour, we roughly see roughly about the same thing as just a bigger range right here. But if we want to get more detailed, I like to go on 30 minutes and 15 minutes. Okay, I just cycle between these time frames every day to see if I'm missing any pieces of the puzzle. It's all about putting pieces in the puzzle. This was clear inducement I marked ahead of time. We tapped into demand here and then pushed back up, taking out this inducement. And don't forget, what I tell you guys, inducement can potentially cause reactions. It doesn't always just get taken out and then price doesn't give a reaction, right? Especially if this is higher time frame. This inducement got taken out by this candle, and look what happened. We had a reaction off this inducement. We had a pretty big move right here. Definitely could have caught this move. Look how big this move is as soon as price took out this inducement. And then we can look for a potential entry if you want to counter trend, right? This would be counter trend trade against the external structure. And here I can see we don't have much of a OB entry here because price never returned back to the OB, but we do have inverse fair value gap, lowest in the leg, and boom, we could target something like that, or If you're really confident, you can move your stops there, right? It's 5 OR. And then target, of course, the most previous demand that broke structure here. So this structure right here I marked here is off the 50-minute. You guys can see, based on the 15-minute, we failed to break structure here. We held the low, break, held the low. We broke even higher. We held the low. Okay, the low was already back here. We held the low, and then we broke again here. And then we held this low as well. As you can see, all these strong lows are getting held, and then the weak highs are being targeted. So that was my external structure. That's where I was drawing my break structures. So that's my external structure for the day, right? And then what I'm trying to say to you guys is this break structure here is internal. You could say these are even internal. The 15-minute break structure are internal for this major break structure above right here. So that is definitely something you want to be putting the pieces together, okay? This is internal here on the 15-minute for the 1 hour external, while the 15-minute external is external structure for the 1 minute internal. So that's how you guys are putting these pieces together with neighboring timeframes. And you definitely want to be switching timeframes if something's not clear. If you don't see clear imbalances with an OB, you want to switch timeframes, okay? So it's a trade today. As I told you guys earlier, you can always take counter trades. They're just not as high probability. This is why when you're counter trading, you can have a stricter break-even system. For me personally, I saw this zone right here. It is essentially a really high flip. You guys can see this flip structure right here. This is a flip here. It broke previous structure internally. And so I was seeing that potentially if we could still go higher from here, right? Of course, we want a deeper mitigation to this demand here and then go higher. But what I see right now, anticipating prices to come back down here to this demand and then take out this high at some point, right? That's my external view on price, external draw. So I broke even. I entered off a inverse fair value gap here. You could have entered also off an OB here. Like I said, right here, newly formed OB. You would have had a better risk reward, but it's all good. I didn't mind that because what happens a lot of times, if you guys have been noticing, is when we take out a high, let's say a weak high, when we're counter trending, we tend to come back to the range quite fast if you want to. So you guys can see here, you really couldn't really enter properly here. You have an inverse fair value gap there, and then you would enter here and target some man here, right? There isn't really much retracement back, okay? So as you see, we have impulsive moves, so that's why I decided to take an inverse fair value gap entry. This all depends on how price delivers, like I mentioned. We have an impulsive delivery, meaning we most likely won't have as much retracement. But in this situation, that did happen. Once I got hit break even here, you have to reanalyze price. I know price is bullish based on all my confluence that I put together. So we do indeed want to look for longs. This is a B plus setup. I would say this is not an A plus setup. Why? Because the A plus setup would be in premium discount of this leg here externally, but we do have premium discount of this leg here internally on the 1 minute. Now the reason why I took this trade was because my target was for this high to get ran, to get taken, which happened here. This is my external break structure, like I mentioned, off the 15-minute, right? 15-minute, we are breaking structure. I want price to break structure again. Now the thing is, this is most likely, you can even consider this not a real break structure. Why? Because this is just creating inducement here for price to come back down here and create the real break structure. So you guys are seeing this is something like model looking like this. The Tachi guys, inducement comes back here, right? You guys remember that model. So essentially this is all just inducement for later. Let's get ran. And so you could mark that not even as a valid break structure, but my draw on liquidity was for sure here. I was very confident because, again, we had a high flip here. This was a B plus setup. We also had a sweep here. I was literally going to mark this as a break structure. However, using what I taught you guys today, price came back so fast, did not have a body closure below, right? You can go in the 5-minute, 3-minute, the higher time frame, the better for body closures for breaking structure, and we just had a wick closure. So we consider this a sweep. What does that mean? You guys know if price sweeps something, we are expecting price to take out the other side. So if this was a sweep, whether it's internal or external, it's the same thing. We expect price to sweep. If this is an uptrend here, then we expect price to break structure. If this is just a complete range, then yes, this would just be a sweep as well. We'll be sweeping both sides. This is what ranges like to do. Sweep both sides, respect demand, respect supply like that, right? So that's what I was expecting. I was expecting price to at least cause this internal break structure, which it did. I did not take an entry here. I definitely could have, but it's just iffy. Okay, when you're trading this high up in the leg. Again, you can see based on using time theory, we've been trading in this internal 1 minute range for an hour. What does that mean? Price that's like even farther away time wise. Like this was what, 10, 11, 12, about an hour, right? We haven't not even gotten close to filling this, right? We're coming back. So we most likely will be playing in this small range for quite some bit of time and then later on fill this. So I saw this internal breaking structure. This means we're internally breaking up. Internally, okay? Internal, not external. And then so therefore I was looking for an origin. This is an origin here that we tapped into, and then I used an OB entry here, entered 3R targeting the weak high. And the reason why this is a weak high is clearly because we have internal breaks respecting demand. And we are bullish externally. So this was an internal pro trend, an external pro trend trade, which is A plus. So you can see my target was this high. You can also target this high as well. Since we're expecting drawn liquidity to be up here, I just target there because especially when what happens is if there's a small significant difference between like two TPs, I tend to take the small TP just to be more safe. Also with spread, if you have spread between 4x, you'd rather take the smaller TP than have price potentially reverse all the way back down, hitting you break even, and losing all this potential unrealized profit, right? So that's why I TP'd here, because you can see the TP difference is very minimal, 0.3. Now over a long period of time, that is could be a lot, but we don't care about that. So here, this is a good trade right here. And then after we take out this high, this is all as inducement, you expect price to essentially come back down into an internal bearish trend, which is what it's doing right now. Okay, this looks like a QM model to me right now. I taught you guys QM. We might potentially come back up here to that zone and then come down here. And then once we come down here, we create a new structure and then push back up, taking that high. Now, price, obviously, we anticipate price, right? Trading is about anticipation plus reaction. So we use both confirmation and anticipation. Sometimes you can not use confirmation, have a limit order. For example, at this zone here, the only thing I didn't use a limit order here at this zone is because you guys can see actually the lowest part of the leg is down here, but this is all mitigated, right? You guys can see there's no imbalance that's not filled. This is all filled already, okay? And I don't know if I talked to you guys about this, but mitigation, all it means is an order block, OB, that taught you guys. You guys should know how to draw those out. Getting tapped. So as soon as it gets tapped, it's mitigated. So this OB here got tapped right there, as you can see, and it's mitigated. That means prices come back here. We should not be drawing this OB here anymore. We should stop here. We should not be extending this out over here and expecting price to give us another trade here because you guys can see we do have a reaction, but this is not a valid trade at all. So that's what it is. These are definitely not as high probability zones though, because we usually will want to see something unmitigated down here at the extreme instead of somewhere here, which is a little iffy. This is more like a flip internal break right here. You can also say this was the internal break right here. Okay. This is an internal break for this internal break. So this would be like an internal break structure, for example. I'm just using an example for this external break structure. Okay. Now technically this is where the internal change of character happens. We had a low and then we broke. So that is essentially what I just wanted to cover today between how price reacts off a break structure will determine the how valid that break structure is. So if it has a strong closure below off like a higher time frame, 3 minute, 5 minute, it's a lot more valid than like a wick closure, which could potentially be a sweep, like today, right here. So those are the trades for me. And actually for this trade, I was actually honestly expecting price to come up and just immediately take this high right here externally, but it didn't. So instead it came back and led to an internal change of character. So if this is all internal structure here, this is the last low. This low should be protected, or this should be a strong low, but it broke. We broke it at some point, right? As you can see right here, for example, this is a very weak break on the 1 minute, especially the wick. It only wicked the low. It did not have a body candle closure below the low. So that's a very weak change of character. A strong one would be something like this. We had a body closure below here, or we have multiple body closures below, which is even better. Multiple body closures represents a higher time frame candle, which is right here. So you guys can see right here, this candle right here was the body closure. So that gives us a very strong change of character. So now what can we expect? We can expect bearish price action to continue down here for this higher time frame demand to tap in and take that high out right here, the external high. So putting these pieces together, that's how you put these pieces together on time frame. For this situation right here, right? You could say we also tapped into a 1 hour supply, and that is why price is failing to break this high right now. Now, the only problem I have with this is I was seeing how this was also supply, right? This could be a supply chain to go lower, right? Because we have an external break here. So what does structure look like right now? It looks like something like this. I wouldn't even mark this actually. I would just mark that. However, the thing is, I was marking this also as potential inducement, but it might not be. The only reason why is because this is also a flip, which I said is also valid, right? This flip here broke internal structure right here. Broke internal structure right here. So it is indeed a valid POI to trade from. This would be the main inducement here for this. And I was seeing if this would be inducement for this right here. Again, it all depends. So we'll see how price reacts off this zone. If price doesn't hold this zone, then yes, we are expecting bearish prices. If price holds the zone, break structure, I'm still bullish until my high time frame targets. This is why cycling time frames is extremely important. Understanding internal and external structure is also very important, and things like that. I don't think I have too much else to cover today. I think that is roughly about it. Let's see. Equal lows, equal highs. I tell you guys I don't use these often, but when they do appear, you guys can use them. So you can see right here today is a example. This is pretty relatively equal lows right here. Price did a one last sweep right here, and this is something you guys can use. Remember when I said how fast price closes? So this is how fast price closes. Price does not have a body closure below. What does that mean? We don't mark this as a break structure. We mark this as a sweep. And you wouldn't know this until later, right? You wouldn't. But if you have one candle that 1 minute candle close that breaks this low and then closes the body above very strong, creates an bullish OB right here. We could even enter off here. And then what are we expecting? Well, we always mark. This is why I have this tool here to you guys to keep track of the higher time frame order flow, which is external structures bullish. So we can expect and target there. That would have been a very nice 7R. I did not take this trade, okay, at this time, but that's definitely a trade that you guys potentially take. I would much rather prefer taking trades off like something like this here, right? Off a zone than off external liquidity. Main reason is because external liquidity gets iffy sometimes. So for example, if I show you guys here, we had a break structure here, right? We're breaking up, break structure. And look what happens. You can have multiple confirmations. This supply failed. This supply also failed. This supply also failed. And then we had the real move, but it never came back to supply. So basically, price was just trapping people. Okay. So that is why I tend to not like sweeps as much. So this is a quite rare setup. I usually wouldn't take this, but I saw this huge imbalance that needed to get filled at some point. So I took it and had a more aggressive break even approach. And let's say you guys didn't break even here, right? That's all good. Price came back here. I was expecting this new OB here. This is not inverse fair value gap here, but this OB here to hold. It did help. It did hold. But it caused a sweep instead of a break of structure here because of how fast price came back up and closed. So based off that, you could have also had time to break even. Like for example, you could have broke even here. So that is also another thing you guys can also use the confluence for break even points. If price immediately closes back up, this is a very bad time for you and you should break even versus if price has a very strong break, you can potentially still leave it open your position in case price wants to come back and mitigate, but most times price will not want to come back and mitigate. And the reason I tell you guys this is if you think about price like this, prices when it goes to your POI that's unmitigated, in terms of like how price delivers off that POI, it's not going to deliver the same. It's not going to keep on mitigating. The reason why is because it needs to leave things that are unfilled for price to later mitigate. So, for example, let's say you entered off this trade here, right? Price is not, most times when you're entering based on delivery, price is not going to do this and keep mitigating like this. This also creates trendline liquidity, by the way. Okay. But most times it does not do that. You need to leave orders unfilled here for later to get filled. And the reason for this, logically, you can think of it like this. Institutions, they have a lot of money, right? They move the market. We don't really move the market at all. Very minimal. I've seen orders of 40 mil get placed and it moved like this candle right here is probably equivalent to 40 million right there. So imagine how much money it takes to move something like that, right? It's crazy, crazy amounts. So what I'm trying to say is institutions are not going to merely fill their huge massive order at one time. Otherwise, it would just cause the market to skyrocket order up here, and that would just wouldn't make any sense, right? They wouldn't have any room to make profit at all because all this buying is the thumb. There's no to selling to them. So they leave unmitigated orders for price to later come back at some point right here. For example, price comes back here to then fill the rest of their order to push higher, right? They split up their orders in different parts. They don't want to fill it all at one time. So that is basically the logic behind when you're entering off an entry, price may not always, will most times will not always mitigate and make it clean. As in, it won't make a very efficient, it will make very inefficient pricing after your entry, which means it leaves inefficiencies like gaps, order blocks behind. So you later get mitigated. I can find another example here. Let's see. This is a good example here. Let's say you entered here, impulse entry, the Thai guys impulse model right here. Boom. And look, price disrespects this supply and just breaks through. No reaction at all, no reaction at this either. It does some mitigation here, but there's still a lot of inefficient price action with fair value gaps leaving behind here. Why? So later these can get filled for the external pro trend. So orders got filled here, more orders got filled here, and then one more sweep to give them enough selling so they can do enough buying, and that caused an external big move. So sweeps is definitely something you guys want to take into consideration because another thing I noticed is when prices trying to do the external move, especially, it will do a lot of sweeping. Okay, so like for example, this is a big OB. I tell you guys to always refine your OBs if they're too big. So if your POI is too big, like this is too big, depends on the time frame you're entering off, but how I teach you guys is usually 1 minute, right? So you gotta think about the size of the 1 minute candles. This is way too big of a time frame uh, point of interest. You want to refine it down to something maybe potentially this candle right here. Okay, this would be a more refined zone here. Now the thing is, when we have POIs like this, where everything is mitigated below the most extreme, I like to just cover this entire leg right here. The reason why is technically, you could say, well, you could technically say the predicted low or strong low is down here, not here. But this is technically included in the leg structure. So I like to just mark this entire thing instead of just this. Because you see, this obviously got invalidated, but that doesn't mean that there's no demand anymore. There's still demand here. Okay, if I decide to sweep this before creating a new break structure, there's a lot of manipulation in the market. People don't believe it, but that's literally how it works. And so, especially since we're trading off the low time frame, we will encounter a lot more manipulation. But if we're able to anticipate these things and understand it, we will be good and basically able to print. So you guys see, let's say there's no valid OB or anything formed here, new demand. So you wouldn't have taken this entry here unless you took an impulse entry, which I would say, yeah, it's a valid impulse entry because of look how many imbalances there are here. This is all inefficient pricing that needs to immediately get filled. You took an L there. Price takes out early buyers, does a little bit more inducing here with these little moves to try to trick people into buying too early, and then takes them out here with a huge wick. All it takes is one little wick also to take people out, right? People are gonna have their stop losses right below here. Takes them out, and then boom, look what happens. You barely get an opportunity to re-enter off an OB. It just completely goes to TP. So that's why that's also another thing that happened here, right? Had a lot of fake outs here, essentially sweeps, and then all of a sudden price did not even come back and give us an ability to enter here. So that's when I typically like to use inverse fair value gap entries for sweeps because of that exact reason. You can see same thing happen here. No retracement. So again, that is basically it for this section. Hope you guys did take a lot off this. This section was mainly talking about differentiating between sweeps and then break structures more in a more advanced way, as well as internal and external structure. Just doing a quick review over that. Oh, and one more thing I want to talk about. This is not really related to the structure thing we were talking about earlier, but it's just talking about the timing as well as the impulse, how big a range is. So usually, if we have a very big move, we will expect a slow retracement. This happens very often. So, for example, this is a pretty example here. We had a huge move down here, and what happens? We have a very slow retracement phase here. You guys can call this mitigation phase. Back up to fill all this, right? And this is actually inducement here. I would not be looking at short here. You can, for sure. But you guys can see, you can only short back to the demand before it takes you out. So this is why using high time frame context is very important. If you didn't use a high time frame, you're stuck in a low time frame, you wouldn't have really seen this much as inducement. I mean, you can, I can, but it's not as clear, right? This is clear inducement because price did not come back to fully mitigate before creating slow. So this is actually just a fake internal break structure. This is just an internal sweep, essentially. I don't mark these, though, like I mentioned, but that's how you can see it. So, again, when you have a big move, especially a huge move down in one direction or up, we expect a slow retracement phase, and we want to be trading this retracement phase. We want to be trading this internal structure here of this leg here. This is internal structure of this leg, but this is also external structure for a lower 1 minute time frame that we're entering on. So make sure practicing these things, backtest them. Just continue forward testing, backtesting, do whatever you can, get enough screen timing, and later on you won't have to really think hard about these things. You'll just see them. I just like to mark my charts, so if people had any questions, I can answer them. But yeah, that's it for this section.